From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for March 1st, 2016. In a moment, we'll be taking a look at the GBPUSD, the Greater British Pound versus the US dollar, for today's trade analysis. But first, a recap of a couple of the trade suggestions made over the past few days. First off, starting here on the NZD USD, the New Zealand dollar versus the US dollar. We've been studying this blue box over here on the right-hand side of the chart. The market has been in this range or congestion zone for quite a long time. We're going all the way back to the left-hand side of the blue box into the beginning of February. So basically the entire month of February just kind of bounced around inside this blue box. Last week taking sells all the way up here at the pink shaded area, significant profits made as it pushed all the way down here to the yellow shaded area, and even underneath it yesterday as it pushed all the way down here into the close to the 65, 50s and 60s down here into or just underneath the blue line. So significant profits made on last week's trade. Since it's been underneath the yellow shaded area, we're looking now for new opportunities to go short underneath that yellow shaded area and underneath our range. Let's zoom it in one more time. You can see holding within and underneath that yellow zone. We'd definitely like to see the breakout and the continuation down here towards the green shaded area. So for the day today, I'm focused on selling into the yellow shaded area and targeting back down here towards the green shaded area in the direction of our current momentum that we've seen built in from last week. If it breaks back above the yellow zone, we'll call it 66.15 or so, we could be looking for it to stay within our zone of congestion and range and push all the way back into the 6600s once again. So main focus is that we want to see it stay underneath the yellow shaded area. Taking it over here to the AUDUSD, a lot of congestion. It's been back and forth over the past several days. We see significant on Friday, a significant fall here for this currency pair. We have a lot of news out of Australia this week, through the entire week, several different pieces of news coming out of Australia. Focused in right now currently on selling this currency pair on rallies into resistance, currently in a sell from the orange shaded area as it spiked up here towards the 71.70 level, went ahead and took into a sell, sitting currently about 10 pips of profit on the trade. Would like to see it get some more bear movement here on the currency pair, heading back down to 71.30. which of course is the blue shaded area. Anything under there, we might look for the continuation of the downward slide here for the Australian dollar. Otherwise, back above 71.90, the orange shaded area, we might even look at another attempt all the way back up here towards the mid 72s and the yellow shaded area up here towards the top of the chart. So main focus today is that we want to see it stay underneath this orange shaded area and begin the next phase of the downtrend for the Australian dollar. Next, moving over to the GBPUSD, Great British Pound versus the US dollar. Obviously, this currency pair has been in a downtrend. Nobody would argue that, I don't think. It's a long-term downtrend. We're looking for opportunities to get into a downtrend. So if you're looking for opportunities to get into a downtrend, there's two reasons to do that. There is the breakthrough support. That's one reason to get into a sell. It breaks through a support barrier and continues to go down, or it rallies to a higher price. It rallies into a resistance, and that's what we're looking at currently. The market is rallying towards resistance. So as it does that, it gives us a little bit better price to go into a short. Does that guarantee it's going to turn around and go down? No, it could continue to pressure higher, but if you're looking to sell in the direction of a downtrend, it makes much more common sense to sell it at a higher price than it does a lower price. So we're looking for resistance levels. We're looking for opportunities to get in for reversal to go back down in the direction of the trend. We take Fibonacci. We look at other evidence and tools to help us identify future potential movement here for the currency pair. Obviously, like I said, it's been in a downtrend, so we're looking for clues to sell it in the direction of the downtrend. Let's zoom it in a couple of times here. Fibonacci high down to the low puts the 236 Fibonacci retracement level at 1.4030. That's just the top of our little yellow shaded area here. We can see the last couple of candles over here on the left hand side that found resistance into this yellow shaded area. So for the day today, this becomes our opportunity for going short in the direction of the trend for the GBPUSD. Somewhere right around the 4,000 level, 1.4000. The bottom of that yellow zone is right at the 1.4000 level. The top is at 4,020. So in that zone, 4,000 to 4,020 becomes the opportunity, or maybe just a hair underneath it to make sure that you get into it. I currently have a pending order sitting at 39.95, waiting for it to make one more bump into that yellow shaded area. If it does, great. I'll look for an opportunity to get in short target the blue zone or lower. If it doesn't, of course, I'll look for new opportunities. Breaking above the yellow zone, 4,020 would be the risk on the trade. If it gets above there, we're probably looking for it all the way back up here to the pink zone. So we know what a potential risk is. The potential risk of selling the yellow zone is that it goes up to the pink zone. The target is, of course, the blue shaded area, or of course, if it breaks through that blue zone, we look for lower targets, and of course, we picked some of those out during the trade room yesterday. A couple of different things. We could take Fibonacci from other swing highs. We could take it from this swing high down to the low like this, and we find the 382 of that range sitting at 1.4047. Again, that's just above our yellow shaded area. So the main focus is resistance, into the low 4,000s, looking for it to head back down towards the blue shaded area or lower. A break above here, a break above the low 4,000s, we're likely heading back towards the 4,100 level here for the GBPUSD. 4-hour time frame doesn't really change it, just gives us a little bit better look at that resistance over here on the left hand side. As long as it stays underneath there, I'm looking for it to head on back down towards the blue zone or lower. Yesterday, of course, we did take a sell as it was underneath the blue shaded area, looking for it to find resistance into the blue shaded area underneath this last support level, and obviously it found very little resistance underneath that support level and just continued to pressure higher. So hopefully used appropriate risk strategies if you were in that sell from yesterday. Now again, challenging the resistance level here as long as it stays within or under that yellow zone, looking for the next leg lower. Anything above that, like I said, that's the risk, is that it continues to pressure higher back towards the pink zone for the GBPUSD today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.